is about to begin. Rise up, it's time to log in. LP Army will teach you the way to be LP warrior starting this day. We live for the fees we make. Soon it is profits that you will take. The LP Army marches strong. The best in soul, and now we sing our song. We live for the fees we make. Soon it is profits that you will take. The LP Army marches strong. The best in soul, and now we sing our song. We are LP Army, rise to the sky. Dynamic fees, our battle cry. LP warriors will never die. Thereof we will fly. Rise, new soldiers, rise. Rise, new soldiers, rise. Spot, copy, ask, use them all. Winning's the task, we heed the call. Bootcamp, join our ranks so tight. Listen to the Goose Gang and gain your might. We will print and we will earn. Once you gain this tokens burn. Join the ranks of the brave and bold. Story of the LP Army told. We are LP Army, rise to the sky. Dynamic feast, our battle cry. LP warriors will never die. Thereof we will fly. Rise, new soldiers, rise. Rise. Take the course and earn your role. March with us and earn some soul. Dodge the rug and join the fight. We gain together LP Army might. Make your position and join the pool. Post your wins with Alex's tool. LP Army, we fight to win. Your journey is about to begin. We are LP Army, rise to the sky. Dynamic feast, our battle cry. LP warriors will never die. Thereof we will fly. Rise, new soldiers, rise. Take the course and earn your role. March with us and earn some soul. Dodge the rut and join the fight. We gain together LP Army might. Oh.
All right, welcome everybody. Good morning. If you are trying to find the Meteora LP Army Bootcamp, you have landed in the right place. That's our theme song written by the one and only Heavy Metal Cook, and we're ready to kick off. This was being live streamed and recorded, both on both on Twitter or X and YouTube. And if you have any questions, please do see the comments on this tool again, StreamYard. We'll do our best to answer your questions, but without further ado, the alpha for today, here's what we're covering. This is just a quick intro slide to get us all warmed up. We're going to cover the basics, and then anybody who wants to get into more detail and potentially earn a role, there'll be a lot of information about that and much more on day 2 as well. This is a 2-day session. Quick disclaimer, this content is for informational purposes only. None of the people you're listening to today are financial professionals, and any of the positions you open, you're doing so at your own risk. Any funds you're investing, you should be willing to lose. And by completing this course and joining it, you are agreeing to these terms and agree to hold Meteora and the instructors harmless for any damages or loss of funds. And if you don't agree with these terms, it's cool. Just go ahead and log off and don't continue, no problem. To do the course over the next 2 days, you're going to need to agree to the terms and conditions, and you're going to need a Web3 wallet, such as Phantom or Backpack. I use Backpack for this boot camp. I forget which one my co-host Geeklad uses, but he'll be doing day 2, and he'll have a wallet as well. And you're going to need that wallet funded with 1 Sol at least. And you'll see why when we get to the end of the presentation today, where we talk about the graduation rules. And then finally, we'll touch on this a number of times, but you may have beginner's luck, and I do wish everyone to have good luck whenever they're market making and trading in crypto or trading in general. But the reality is, it's a challenging. I don't know how you're approaching it, but hobby or job or activity, and there's a lot of competition, and everyone else is trying to make money. It's one of the some people call it the biggest game in the world. So you should probably be prepared to lose a bit as well as win, and usually the losses happen first, just probabilistically speaking, because you're likely to lose more than 50% of the time. But if you can bump those percentages up, you will have much better odds. And if you can let your positions run, those odds will overcome the low percentages. And that's what we're all aiming for. If you can get your percentages up, then you'll do quite well. And the ability to have long-term gains is going to be based on whether you develop the fundamentals, which was what we're going to start with in this course today. And then, of course, Meteora and liquidity provisioning through the Meteora tools will increase your odds rather than just slinging meme coins and going YOLO into these different positions. So that's that. Quick introductions. I only have detailed introductions for 2 of us. Geeklad will have a detailed introduction for himself tomorrow. I'm a Web2 founder, had a couple exits. I'm on the technical side, and been around a while, seen a couple of crypto winners, feeling a little gray-haired and old these days, but feel really old when I go to crypto conferences because it's mostly young folks that are looking toward the future of finance, which is awesome. I spend most of my time in a couple of DAOs, Meteora, obviously, and Liquidity. I used to participate a little more heavily in Mad Lads and Jupiter and a couple of others. And I also run a validator. And if anyone wants to stake, it's called Sign Labs. And then for me, why crypto? I feel like over the last 20, 30 years, a little bit of the creativity and innovation on the internet's been lost. And I'm really excited about Web3 and crypto as a way to sort of reclaim some of that and give more people a shot. Now that we've got the hyperscalers and lots of really great jobs in the internet, there's sort of a there's an interesting part of it that is now global and wide open, which is super cool that I want to be a part of. So I want to try and build something useful or help others do it. And I personally love teams and competition, and obviously crypto is great for that. Lots of small teams doing interesting things, and especially Raccoon's Labs, the kind of parent of Jupiter and Meteora, are just fantastic shippers that deliver a ton of great products into the crypto ecosystem, specifically on Solana. You can find me on X at Autocatalytic. Heavy Metal Cook is the other stud that runs these primarily. Geeklad and I ran the first 5. He's since taken over and grown it dramatically, and is probably the reason you're all here. You see him all the time in Discord, and I'm just going to skip over the details of his um, resume, but the uh, you'll see him around, and you're primarily going to be taking his courses in the future. I'm just stepping in for day one, and he's working in the background today.
Yeah, thanks, Otto. Hey, I'm so happy to have the OGs of boot camp here today. You and Geek paved the way, and this is awesome. Excited to have you here. Thank you.
Yeah, let's have some fun. And actually, Geeklad and I were flipping our roles. He's more of an educator than me, and used to take the first day, and I would do the kind of advanced, more, it's not really advanced, but more advanced stuff on day two. And so today we're switching that up, and should be fun. We'll see how I do. Geeklad is in here. There he is in the middle there, on the bottom. Did you want to say a couple of words, Geeklad, and then you'll flash your full resume up there tomorrow?
Yeah, no, it's really happy to be participating in a boot camp again. I really enjoy this, and I really enjoy educating the masses, getting them up to speed on how to use the platform and how they can become profitable on the platform. And um, I really enjoy boot camps so much. So it's awesome to be back in front of you guys and doing some instruction. So looking forward to seeing you guys tomorrow, and looking forward to seeing Otto take on day one today, and I'm looking forward to taking on day two tomorrow. Should be fun.
Big shoes to fill, my man. Big shoes to fill. These are the other instructors. You'll see them around. I wanted to make sure we leave that up there for a little while so everyone sees the icons. I think they're consistent with what you'll see on Discord. And I mean, the LP arm is strong, like the song says.
We got to get Magica up there.
Oh, yeah.
Yeah.
Magica is going to need to get up there. And Gosha, is Gosha there? Yeah, Gosha's on there.
Yeah, it's always a work in progress. People have to get
Totally.
cycled, or I make it smaller.
Yeah. Thanks for calling that out, Geeklad. Yeah, Gosha. I mean, sorry. Yeah, Gosha and Magica are here today helping with answers and tracking things on Twitter and YouTube. And thank you very much for your help. To get the most out of this course, use the chat for questions. If there's anything that's unclear, we'll go over the agenda and what to expect today in a second, but just know that that's there. Please try and keep your questions concise. It is English dominant there. So if you're having trouble with that, just maybe after you can ask questions in Discord, or later on after the recordings are posted, you can see subtitles in various languages if you view on YouTube and so forth. Complete all the exercises. You don't necessarily need to follow me and the demo I do, but you're going to need to actually put some money at risk to really learn. It's the best way. In traditional markets, often the trading platforms have what's called paper trading. I've used those features. There, you never learn as much as when you actually have some actual risk on. So hopefully everyone will complete the exercises, and you'll need to complete the exercises if you want to graduate. And we'll talk more about that later. And then, as I mentioned, feel free to follow up anytime after bootcamp ends. All right. Here's the QR code that refers you to all the links. I believe this is a Google Doc or a Google folder.
It's now
This
a
is
PDF.
heavy PDF. Okay, thank you. Yeah, the information repositories have changed over the boot camps, but this is something that Heavy Metal Cook created, and I think it's really helpful. Yeah, that's right. Yeah, I looked at it on my phone. Now I remember, and it's got a concise representation of key concepts and links to other resources and so on. I'll leave that up for another second.
And we'll share it again later.
All right. Cool. So there's a couple of sort of intro and agenda slides coming, but by the end of today, just so we have two flashes at it, the you will know is basically what you'll know is the terms and the basics. So the language of Meteora and how you can communicate cleanly and easily with everyone else in the Discord or the moderators in the Discord, and also be able to understand what we're talking about, because a lot of this stuff just goes over people's heads at first. And then in terms of basics, there's a couple of features that rarely get attention. They're called on Meteora platform, they are vaults and farms. They become important in the background, but most people are excited about the DLMM and of course the new product, the M3. We're not going to be covering M3 today. We're still developing materials to teach people about that because it just came out last week. But so if you tuned in hoping to see that, apologize. We'll get to it eventually. I do encourage people to actually, I'm going to hold off on that statement. Dynamic pools are the other thing you'll learn, and that's one of the other ways to be more passive and contribute liquidity and invest on Meteora. And then DLMM fundamentals, we'll do a significant amount of time on that, and Geekclad's going to cover that in detail tomorrow. And then in addition, we're going to do a couple of live demos, both in stable pools and in volatile pools. And I think we're going to do a quick live demo in dynamic pools as well, if I recall. All right. And then another look at the agenda, just in terms of the order of things that's coming at you. We're going to go over market making and liquidity providing. Already threw some terms at you, so we're going to go over all those terms. I'm going to try not to inundate you and flood you with all the terms at once, but there's just a lot to cover, so hopefully we won't totally overwhelm you with all the terms and jargon, but we are going to need to cover that so you have the basics down. Then we'll go over what makes Meteora special and the points program. And then, like I mentioned before, significant hands-on activities. Day 2 is really the day to, no pun intended, get our hands really dirty. And so Geeklad's really going to have some fun with that tomorrow. Hope everyone comes. And then we'll try to save a little time for Q&A. Sometimes we end a little early, but it is slated to go for 2 hours. All right. I see no questions popping up on the screen so far. So it looks like we're good to go. I'm just going to take a sip here. Moving on. All right, so let's get into the terms. Market making on the blockchain. I just love this guy, man. Matt Boy. So liquidity. Our first term, liquidity, is going to be thrown around a bunch. A liquid asset is like cash or a stock, and it's any asset that can be exchanged freely for cash. And sometimes different currencies are traded against each other. Those are all things that can be turned from an asset into something, some form of currency easily. And then liquidity refers to how much of those liquid assets are available and how readily they're available. Why is that important? Well, I'll get into that in a second, but first let's do a quick definition on market maker, because this is something that is sort of unique to financial markets. Everyone's familiar with markets, like your farmer's market or grocery store, corner store, of course, but market makers are the ones that provide price quotes for assets. So I need to trade some dollars for some Australian dollars. How much? What's the exchange rate? Or I need to buy bonk with USDC. How much is bonk in USDC? Well, somebody needs to quote those things, and those people are market makers. Automated market makers are just what it sounds like. They're programs. And now that we've got this amazing new computing field called smart contracts, automated market makers are smart contracts that provide those quotes based on all the information in the blockchain or on the web. I don't want to get into oracles, but they need to get their data from somewhere. Often it's based on all the information out there, and sometimes it's based on an oracle that gives that information. But those are automated market makers. And in crypto, those are built into smart contracts. LP can stand for a few different things. I know it can be confusing, but you got to contextualize. The primary way that we use it, I would say primary, is liquidity provider. So LP Army is liquidity provider army, and everyone's interested in kind of improving their odds of earning money with their assets, and so that's why the primary definition is there. But it can also refer to liquidity pool, and for the sake of this course, I will just refer to a liquidity pool as a liquidity pool instead of an LP, but just keep that in mind. And then, of course, sometimes it gets thrown around backwards, so providing liquidity. As opposed to an automated market maker, there's a derivative, there's a different type of smart contract that's called a concentrated liquidity market maker, and that allows you to concentrate your liquidity. Traditional AMMs don't use all the capital that are in the pool or in the LP position. They only use the amount that is near the price quote, and that's inefficient because there's a lot of capital outside of those price quotes, as you can imagine, that is there for larger price movements. And so people, innovators in the early days of DeFi and crypto figured this out and decided to build concentrated market makers because, for example, you're trading USDC against Tether, USDT, the price is never going to move that much, and you're better off having more of your liquidity right near the price. And that's a concentrated market maker. We'll get into this in more detail with some charts. And they are much more capital efficient. So here's the general idea in pictures. Here's our automated market maker. And as you can see, the price action is in this center area between, and often it's much tighter than this, but between 30 and 35. Often it's a matter of pennies or even fractions of a penny in the case of stable coin pairs. But then we've got all this liquidity out here. None of this is earning fees, and therefore the ability to have a higher return on the total amount of capital, which is this orange box, is lowered because there's a bunch of capital that's not in the area of price action. And then, of course, the innovation beyond that was concentrated market making, and there's some math behind this, but in simple terms, you're basically moving that same orange box and stacking it up into smaller ranges that have different levels of liquidity. This one shows a very customized position where you've got less out, on the tails, and then the most right here in the center where most of the price action occurs. No questions still. Cool. See if I covered everything there. Yeah, cool. So that's standard AMM versus concentrated liquidity market MM. There's a number of ways to think about market making, but one of the more cogent ways is to think about it like a business where you've got a lot of product and you're selling it at a very low margin. Some of these products are in high demand and you got to do a lot of exchanging. And then you can think about the assets that you have in your wallet or in your market making positions as assets in inventory, if you will. And you can move these things in and out of your inventory into LP positions in order to make profit. And if you end up holding assets like, let's say, Jupe, and the price of Jupe is going down, you are now holding an asset that's a little less valuable than it was yesterday. And there may be a lot of trading back and forth of Jupe, but generally the price is going down, and you kind of are going to be experiencing a little bit of loss as a result of that. But it's only a loss if you then sell it later. If the price comes back, well, now you've got inventory of an asset that's in demand again. And then
if there's sufficient, just to add to that, if there's sufficient volume and sufficient price action, even though the asset is moving down in value, you can still often generate sufficient fees to overcome that loss in value. So that's one nice thing about market making, is that because you're providing that asset, you receive fees when people are swapping that asset back and forth. So even if an asset's trending downwards, if it's trending downwards slowly enough, with enough volume, then you're actually going to generate enough fees to keep up with the loss in value, and those fees will help cover that loss in value. And sometimes you can still even be profitable on an asset that's trending downwards if you have sufficient volume on it and can generate enough fees.
Yeah. Thank you, Geeklad. Yeah, that's a great point. So whereas in a store, you've bought from your suppliers at price A and you sell it to customers at price B, which is hopefully a little higher and covers all your expenses. In addition to that, when you're market making, you take a fee, like what Geeklad's saying. So we'll get into this in much more detail later in the presentation. But that's an important, that's a critical element for market making. I alluded to Sling and meme coins earlier and how it's kind of a lottery ticket type game. But the awesome thing about the DLMM platform that the more advanced users, such as the Goose Gang and the instructors, have realized is you can dramatically improve your odds of profitability if you are a market maker in these meme coins, as opposed to just trying to YOLO in and out of them as if they're lottery tickets and kind of, ride or die mentality. Cool. All right. So let's do a quick tour. We're going to switch off the slides and switch over to the live demo here. We'll do this a couple of times today. And so everyone sees this new tab, right?
Yes. Yep.
Thank
We
you.
see it.
Cool. Let's see here. Uh-oh. Strange.
Is the API messing up again? Awesome.
Could be. Let's see here. Let's see if it's just me. Okay, so Google's coming up, no problem. Sol scan, no problem. Let me just refresh here. Start to come up.
That's awesome.
Dynamic pools came up, but DLMM didn't. Well, this could be a short boot camp, but let's plow forward here. Okay, so just so folks know, it used to be the dynamic pools that come up first, but DLMM is now so popular, it's the default that comes up when you go to the main app.meteora.ag homepage. Going to zoom this in so folks can see it better. And maybe that's too big. Cool. And then let's see what happens here. Yeah, that looks pretty good. All right, but we don't need our wallet right now. I'm going to close that up. So this is the dynamic pools page on Meteora. And the cool thing about this is it's an AMM, but it's a hybrid. So I mentioned before these two innovations in decentralized finance, DeFi, the AMM and the CLMM. The dynamic pools are a little bit of both, and I'll explain this. I'll explain why. What the dynamic pools do is they take a pair like Sol M Sol, and instead of having a straight AMM, they take this unused liquidity and move it over to vaults to increase the yield. So in a way, it's like a concentrated market maker, but it moves some of the assets that is outside of the price action over to what are called vaults, which you can get to up here and more. And this is a super risk averse. Oops, did I not click on that? This is the most risk averse way to drop your assets into Meteora. And you'll see that they're not pairs, they're single assets, like USDC, Sol, and so on. So for pairs that have any of these assets, it'll move them over to these vaults. And it's not always this way, but with the market ripping the way it's been, you can see the yields on these assets are quite impressive over here. So it goes up and down. Usually it's not this high, but USDC and USDT, I mean, it's unless you're a pro at DLMM, it's actually pretty impressive that you can just passively drop Sol or USDT and USDC into these pools and earn that kind of a return. And the cool thing about dynamic vaults is they're rebalanced every minute. And so that's how Meteora with the vault, I'm sorry, I finally clicked, with the dynamic pools product is able to generate as much yield as it does because it's moving over to these other pools. So here you can get 17% yield for a stable pair that is actually a stable coin pair that has very, very low risk because the capital outside of the price action is moved over to these vaults. So that's the awesome innovation Meteor came up with in 2023. before DLMM. And at the time, it was super cool. And then they came up with yet another, which was DLMM. And now M3, M3, as I mentioned, these guys ship. It's super impressive. Okay. So to get into this in a little more detail, I'm going to shrink this back down so you can, so I can maneuver a little easier. So looking into one of these in a little more detail, and we will start with USDC, USDT. Things to call out. There's a 365-day yield over the total value locked, and we'll get into these terms in a minute. But that's sort of the long-term return. And then any of these terms that seems, most of them anyway, that seem a little confusing, there's a little icon there that you can hover over, and these will give you a little explainer on what they mean. Within this one, you also see the other fields that you need. On the left is a lot of information about the pool itself, and on the right is the place that you put your capital in and withdraw it and occasionally swap it. But we hardly ever use the swap feature. This design layout is consistent throughout all of Meteora's products, so except for M3, M3. So I'm just going to stop saying except for M3, M3 because it's so new, and it's best to think about it as a wholly separate product for the purposes of the bootcamp. But this layout is consistent throughout all the products, and all your detailed information for learning about the pool and what you might do with it is over here on the left. So I'm just going to zoom in on that. And you'll see, I'm just going to walk through these infographics. You'll see the amount of liquidity total in this pool, not your position. And it's unbalanced, as you can see, but because these are such stable prices, sometimes they just get imbalanced in the sense of more people wanted USDT, and so they bought USDT and sold USDC, and so the pool got a little bit out of balance, and this stuff can get rebalanced, but it doesn't happen every minute like it does with vaults. It generally flows with supply and demand. And then it'll give you the current pool price, which you can toggle back and forth with these arrows. And then it'll give you the amount of volume, the yield over 24 hours in dollars, and because we have it in percent up above, and then the total amount of fees to all liquidity providers. And then importantly, and this will come up a number of times when we get into the DLMM, but the liquidity provider fees are dynamically set by people creating pools in many cases, but for the dynamic vaults, there's usually just one or per pair, and it gets set by the platform. And this amplification is the amount of concentration. I think I misstated earlier by saying it was automated market maker. It is the dynamic pools are do have some level of concentration to begin with, and they also then take the liquidity outside the price action and put it into the vaults. Apologize for misstating earlier. And then over here on the right, we are seeing where the panel where we put in capital and take it back out. So, for example, I'd want to put in $100. Because of this ratio here, it's going to put in an amount of USDT to match that according to that ratio. And then once I've got a position, it'll kick out a staking token into my wallet. I'm not going to do that right now. And then when I go over to withdraw, the amount of staking token that I have will show up in this balance, and I can withdraw it based on how much I want to take out. And it'll show up it'll pop in the amount of USDC and USDT up here, and we'll demo that in a minute. Cool. And then continuing with our tour, we've got farms. Going to zoom back out so you can see this whole screen before we drill in. All right, so farms are where token providers can give you extra emissions or tokens to provide liquidity for them. So for example, if Bonk wanted to increase the number of people that are providing liquidity in their token, they could offer it as rewards, and it would show up on Meteora in this area here. And I think there's a couple of projects that still do this. Yeah. So here is a stable coin, ACUSD. I forget the project name. And then another one is Hades. And you can see here, Hades, in order to encourage people to provide liquidity in the Sol Hades pair, is emitting 91,000 Hades tokens per week to people who provide that. And the effect is, in addition to the return you're getting from fees, you are getting Hades token in an amount that jacks the yield up to 93%. Why would they do this? Well, first, Hades is a volatile token, more volatile than Sol. And also they might need to have more liquidity in different parts of Solana around a wider range of prices. And so that's why they are kicking out this token. The challenge here is, of course, you get a much higher yield, but you're probably going to sell the Hades tokens that you get as yield in order to realize the gain. And that's the economic equation that the Hades project is always managing, is like how much extra emission do we want to have, because that creates downward price action on the Hades token. And that's farms. Cool. There used to be a lot more of these, and it may come back with the recent bull market and the so we say legislative changes that might happen in the US when it comes to emissions and tokens, but it's probably still going to be a little bit cooler until there's more clear legislation. But without getting into that in detail, meme coins seem to be where it's at, because they actually don't have projects with liability behind them, and so that's why they're so hot as well. Okay. I think that's it. I think we need to flip back to the slides here. Yeah, vault dynamic pools and farms. Any other things to add from my other panelists?
Yeah, someone in the chat was inquiring about, is there a no risk way to invest in Sol? So they've got extra Sol. They're looking to put their Sol to work for them. And one good way to do it is to use a stable pair for Sol against a liquid staking token. So that could be, you can look for a pair where Sol is paired up with Jupe Sol or Jito Sol, whatever the case may be, whatever liquid staking token. And then on top of earning from the liquid staking token, you're also going to earn fees from the pool. And you can do it in dynamic pools, but I would recommend doing it in DLMM, because you're going to get better fees in the DLMM because it's much more capital efficient, right? So as Otto demonstrated earlier, when you're in a traditional AMM, which the dynamic pools are more like traditional AMMs than concentrated liquidity, your liquidity is not going to be as capital efficient, especially with stable pools, because the price action is very, very concentrated, near a 1-to-1 ratio, right? So I would, if you have extra SOL, you're looking to put it to work for you, I would definitely look at putting it into a DLMM where SOL is paired up against an LST. And Otto, maybe when you get to the point that you're demonstrating DLMM, you can look for some of those types of pools and show those.
No doubt. Yeah, we're definitely going to do that. Yeah, I guess in order of risk preference. So the least risky is obviously to put SOL on a hardware wallet. Obviously, that questioner is asking what else they can do. The sort of next level of risk is probably the just native staking. So anybody with in Phantom and in Backpack, you'll see when you click on the asset for SOL, the ability to just stake it. And this is what's called native staking. And your only risk here is the fact that you're moving it off of a hardware wallet onto the Solana network. And if you click on that, you can select a validator, plug sign. That's my validator there. And then you can, put in the amount of SOL that you want to stake. So this is like the lowest cost way to, lowest risk way to get yield. And this is basically just preventing against your loss of inflation, because Solana's total number of tokens, the total supply, is increasing. And so anybody who leaves their SOL just in SOL is slowly being eroded from the inflation. It's small, it's 6.8% per year, but it's, for if you have a significant bag, that's a decent amount of money every year. Then the next after that is to put it into a liquid staking token that Geeklad just mentioned. And that would be something like MSOL or JITO-SOL. And what's cool about that is instead of just having it statically staked in Solana natively, you actually are able to use the MSOL that is not experiencing inflation, which is not losing out to inflation, and just automatically compounds to MSOL. So for example, without belaboring the point too much, if you look at the MSOL or JITO-SOL, it's right there, to SOL ratio, you'll see that one JITO-SOL is actually 16% higher than SOL. And that's because since the date that JITO-SOL launched, the value of SOL has been inflated away a bit, and all of those inflation losses get compounded back into JITO-SOL automatically. So it's sort of a tax-free way to experience that protection against inflation. And in addition, most of the liquid staking tokens like JITO-SOL and MSOL also compound in the fees that they get for providing that liquid staking service. And then third is obviously our what we tend to do here, which is put it into a pool. And that is, let me shrink that back down a little bit. That's going to be like this dynamic pool here, and the DLMM stable pairs that we'll talk about a little bit later, and that is sort of the bedrock of Meteora market making. Cool. So that's from least risk to highest risk. And then tomorrow on day 2, Geeklad's going to go further out the risk spectrum, right?
Yeah,
That
we'll
ought to be
see.
fun.
We'll
So
see.
yeah, well, Geeklat doesn't sling meme coins as hard as some folks in the moderator pool, but the ability to get out the risk curve can really end up pulling in some great wins, and you'll see those little cards where people are posting their wins on the DLMM. It's pretty impressive, the amount of gains. But always remember, there's a channel in the Discord for losers as well. So you might get hyped for the gainers, but always remember there's losers too. Cool. Going back to the slides here. Yes. So getting a little more hardcore on the details. I'm going to close up the wallet. Whenever you're putting assets into these pairs, you're going to expose yourself to what's called impermanent or divergence loss. These terms get thrown around. It's pretty complicated to describe mathematically, but just in terms of the intuition, whenever you put a pair, like say you're putting USDC and SOL into a pool, it's really, really unlikely that when you withdraw your money later, the price is going to be in the exact same spot. And that's all that this is referring to. So another term that we're throwing at you here is two-sided position. So that basically just means you're putting assets on both sides of the pair. You're not just putting in SOL into a USDC SOL pool. You're putting in both of the assets. And then we talked about this without the slide earlier, but to be a profitable liquidity provider, you need to have those fees overcome the divergence loss. And sometimes you get on the right side of this and you'll get a positive divergence loss. And we've got an example of that coming up. It's less often, but happens more frequently in a bull market. So here's our examples. I like these two slides that Heavy Metal put together. I'm going to zoom these in a second, but just to go over the facts of the case, we're starting at a certain price of USDC of SOL. Sorry if the fractioning gets confusing, but basically, if SOL was at a price of $170, and we're starting with about 2.2, about a quarter of a SOL and a $40 USDC. And then we're going to end after a series of trades have happened against our LP position with a price of $171 per SOL. So it's gone up a little bit from 170 to 171. And as you can see, our SOL has gone down and our USDC has gone up as a result of people trading against our pool. So let's get into the details here. Here's our position again that we just reviewed in the demo. And here's the current price, 170, give or take. And the amount of SOL we have here at about a quarter of a SOL and about $40 worth of USDC. And to explain the divergence loss, take a look at this. It's also reflected in total liquidity up here, but this is our actual pool and how much liquidity we have. Cool. So that's the entry state of our position. Then after a little time and people trade because our position's in the money, price has gone up to 171, as we mentioned before. And here's the amount of SOL we have, and here's the amount of USDC. So we have less SOL and a little more USDC. So people have paid us USDC to buy our approximately 0.05 SOL. Cool. And the other thing you see here is that the smart contract has deposited or set aside for our account, for our position, these fees. So by putting our capital at risk, people have used our capital and exchange and done these exchanges. And this is the amount that's flagged for us. And then to claim these fees, we need to click that button there. And the other cool thing is the total liquidity has gone up in this case. So the price went from 170 to 171. Before we had $81.41. Now we're up about 42 cents. I'll see here. And we've also got these fees. So in this case, the market worked in our favor and we got positive on our position without having to compensate for it with fees. So this is the happy scenario. It doesn't always happen this way. I think there's some more data here. Yeah. So the position lost, as we called out earlier, these amounts and gained in USDC. And then the net change was our the position improved by 42 cents, and we picked up about 6 cents from fees, given that exchange rate for SOL, and obviously that's about 3 cents. It turns out we just got about the same amount in both sides in US dollar terms. It often doesn't work out that way because the trade might be going in a different direction or whatever. So that's a really complicated, mathematically intense topic. In simple terms, sort of on the ground reality of how you'll see it happening in your positions. This can happen super quickly if you're in really volatile pairs like meme coins. So while it looks very tame, and we gave you an example that was a happy scenario, this can actually create some significant pain as you go into the more volatile pairs. All right, bear with us a little longer for some more definitions. Total value locked is thrown around a ton, but it's quite simple. It's just the amount of and it's usually expressed in US dollars, the amount of dollars in pools or protocols or blockchains. Volume is the amount of trading within either your protocol or pool or your specific LP position, often expressed in 24 hours. This one's critical. We're going to get into volume quite a bit, particularly you'll see the practical application of it tomorrow on day 2 as Geeklad's walking you through pairs that he wants to trade or market make for. And then volatility is how much it's moving up and down. There's a really formal statistical definition of volatility that some of you might be familiar with. A lot of Wall Street's based on a lot of the strategies on Wall Street and financial centers are based on getting really scientific about volatility. So you can get into as much depth as you want here. In the DLMM and meme coins scenarios, we tend to just look at price charts and how much it's moving and in percentage terms, and also volume. Excuse me. Okay, I just had to take a sip there. Slippage is what happens when you're making a trade. And while, for instance, you entered the trade using our previous example of $170 per SOL, let's say it was exactly $170.00. When you entered the trade, when you execute your trade, it'll take a little bit of time and price may have moved off of that. So let's say from the time you entered your trade to sell a little bit of SOL, the price went up to $170.01. You would have experienced, and that happened before you swapped your SOL for USDC. you would have experienced a price slippage of a penny. So that's what slippage is. And sometimes if you're dealing in really low volume or low TVL tokens, a trade of say $500 can significantly move the price. So all of a sudden you've become a whale within this little meme coin world, and your trade of 100 or $1,000 can significantly move the price, like not just pennies, but percentage points. So be aware of that. And that's the price impact here, the next definition, where you can actually move markets in these really thin markets. And that's one of the reasons why people that issue tokens are eager to put out farming programs that we talked about before, because they want to deepen the liquidity for their tokens so that small trades don't move the price, because nobody of significant size in the markets wants to invest in tokens if every time they touch it, it moves by 5%. And then market cap is just the price of the token times the number of tokens in circulation. Again, usually expressed in US dollars.
Otto, one more thing I think might be
Yeah.
worth mentioning is maybe talk a little bit about what market depth means, right? What does it mean to have thin liquidity? What does it mean to have deep liquidity? Maybe you can talk about that a little bit.
Yeah, that's a great point. I'm going to go back to the platform here. So here's a great example. I mean, Sol MSol, obviously Solana, gosh, it's so impressive. What is the market cap of Solana? Is 100 billion, give or take. So 23 million sounds like a massive amount of money to me, but in the context of Solana, it's actually quite small. So all these trading venues and all these exchanges, they're moving a ton of volume in dollars in a market that's 100 billion in size. If you trade 5 Sol, you're not going to move this market. And even within Meteora, against $23 million of total value locked, you would need to be trading, $5 million in size or $1 million in size in order to move this pool or experience slippage. And that's what
Price impact, not slippage.
Sorry, to have that price impact. Thank you. And so as market makers, we look at this as a very deep market. So there's a ton of depth to the market, because the amount, the ratio of, if you just think about it in dollar terms, the number of dollars that you need to trade in order to have a price impact would be really high. So you can think about the amount of price impact as the reflective of how deep the market is. Did I butcher that, or how was that?
Yeah, no, I think that was good. And
Okay.
and kind of the flip side of that, right? So if we have a market that has very thin liquidity,
Sure.
that means there's not a lot of market depth, right? So maybe we can find something here if we, yeah. So there we got zero.
Zero, is that thin enough for you?
Zero's pretty thin. Looks like there's a lot of zeros there.
Come on, people.
Yeah.
Where's our obviously
Probably a lot of
something to
dead
mention.
markets. Yeah.
Yeah, something to mention here is Meteora is permissionless. So dynamic pools are permissionless, right?
Yeah.
Everything.
And so is DLMM.
Yeah.
So people make pools, and they'll what's a funny one? Moth. Or here's a meme coin pair. This was a meme coin that came up. People keep trying to make cats as valuable as dogs. Like, they keep trying. Nobody has succeeded. Not even Meow. But at any rate, here's a thin one. Sorry,
And this
Glad,
is,
were you
you know,
gonna?
yeah, and
Go
this
ahead.
one, you know, this one, if you're trading thousands, then this would have this is thinner liquidity, right? So if you're trading, you know, in the like Otto said, with the market we were looking at before, you'd need to be trading millions to really move the price. And this one, you know, you could probably move the price, you know, just if you're trading in the thousands. So, and then if you have a market with even thinner liquidity, like say, you know, it only has like 5 or 10,000, um, then really you could just move it with swapping, you know, a few hundred in that market. So so just something to consider, right? So here's some with even thinner liquidity, right? 50,000. So, you know, even some trades here in the high hundreds could end up moving the price. So that's price impact.
Have you met all that question? Should we trade? What was it? Should we trade? It disappeared before I could get to it. That should we trade with low liquidity? Pools with low liquidity, was it?
Hang on, sorry. There.
Yeah. Great question. It depends is the answer. I would avoid them as a beginner, is my general advice. There are some skilled market makers in the Meteora community, in the LP army, that can print serious fees with low liquidity. Geeklad's going to get into the toolkit you'll need in order to think about trading or market making in these assets. But there's some really critical pieces of data that you need in order to do it intelligently. For example, the probability that it's going to be a rug or a developer or a creative just dumps all the token as soon as you get in. So day 2 for that, to get into all those details. The cool thing about working in DeFi, though, if I can just wax poetic about it, is that it's an open chain. So all the information's out there. You're not compete against. I mean, to some degree, there's some large volumes that you don't know about, but for the most part, anything that's traded is in a public ledger, and so you can see all the information that as it exists when you're about to make the trade, which is just such a leveler. It really levels the playing field between the home gamers and the large whales and professional financial institutions. Cool. Okay. So sorry, couldn't give you a nice, clean yes or no answer on that one, but the teaser is there if you can do it well, there's a lot of fees to be earned in that area, but you got to be really you got to have experience and be cautious. A couple
And
other words of caution.
yeah,
Go ahead.
one more thing I'll add about the you know, thin liquidity or thick liquidity. There was a question earlier about, you know, if you're swapping in a thin market, do you just change your swap amount to low levels and try to trade into volume? And that's generally a pretty good idea if you're swapping in a thin
Yeah.
market. If you swap with smaller amounts, you'll have less price impact. It's always better to go to, you know, to swap in other markets that have higher depth, so that way you have less price impact. And then, you know, the last thing I'll say is that if you're swapped through Jupiter, you don't have to worry about any of that, right? So Jupiter is a routing protocol, and it'll route your swap so that you're going to be hitting the markets that are going to have the lowest price impact or give you the best price, right? So you may hit a market that where you would have high price impact, but because it's got a good price on it relative to the other markets, you could still end up swapping through that market to get a good price. So Jupiter kind of takes care of figuring all of that out for you. So, you know, if you're ever doing swaps, I highly recommend using Jupiter, because you'll always get the best price through Jupiter.
Agree, 100%. It's one of the amazing. That's one of the things that made me realize Solana was so different. It's just incredible in that way. Jupiter in particular. All right. Okay. Oh, we are an hour and 10 minutes in, and we've got some ground to cover here. A couple more slides. I'm going to take a quick bio break, and then we'll crank through DLMM and then do a demo. A couple other notes of caution. I like that Heavy Metal put these in early. Often you'll see really incredible and outrageous yields available for just putting in your money in a relatively passive position, sometimes even in the dynamic pool. Often these are the result of someone pulling their money out. As you can see here, the fees are over the total value locked. And so obviously if the denominator goes down significantly and someone has made a bunch of fees recently, the percent return is going to ramp up. That's because these figures, the fees will stick around for 24 hours, right? Because it's 24-hour fees, but the TVL has dropped way down. So just be cautious hunting for winners in that way. And then also the understated TVL. Often about a lot of price action is about to occur because whales have recently entered because there were high fees prior. So another thing to just be aware of within Meteora, these comments and questions come through our tickets and in the Discord quite a bit. So just want to get that one out right in front because you might be super attracted to mouth-watering yields that are just a result of the way the numbers get calculated. Or you might be chasing some amazing yields and then get washed out by whales that drop into a pool. And then finally, there's a portfolio tab. This is in the last, I think since the summer. It's really helpful, so you don't have to sift through all the main DLMM and Vault and pool pages, dynamic pool pages. It'll just bring all of your positions up to the front, and you get to it by clicking on the portfolio link in the navigation bar at the top here. Cool, and that shows you the businesses that you have, and we'll demo that in a minute or two. Okay, I'm gonna take a quick break here and be back in a sec. If someone wants to chat, and that'd be great. I will be back in a couple of minutes.
Thanks, Otto. So yeah, we can take a minute to answer any questions live here. This question right here, showcase how people get P&L pictures. That's actually a topic for day 2. So Geek Lad's going to show you how to do that tomorrow. So we'll cover that. Let's see, what did we do before Metlex.io and Geek Lad's tools? It's dark days, right? Let's see, what else? Do we have any other questions? Are we going to go over one-sided versus two-sided? That's more of a day 2 topic, so we will cover that. Yes. Here, someone asked if we're about to LP into this. No, you don't need to pull out. You could just watch. You don't have to do that part. You could just watch. You're fine. You don't need to remove out. Let's see. Some other good questions here. Geek Lad, you see anything? Or maybe he went to the restroom as well. We set 20% slippage. That, I mean, there's swap slippage and liquidity slippage. that is the maximum whatever it'll go to. Yes, that's the max that it can happen. So that's kind of what big, but yeah.
One thing, one thing, just to kind of wrap up everything Otto's talked about so far, right? So, when you're looking at activity on the blockchain on Solana, all the swaps people are doing, right? All of those swaps are happening through these liquidity pools we've been talking about, right? Not just Meteora. There's a lot of other protocols out there. The major ones are Orca and Radium, and they've got tons and tons of other pools for all sorts of different assets. And so all of the swapping and all the trading that you see happening on the chain is happening through these liquidity pools, right? So people are providing the tokens. They're basically placing their tokens in these pools, and all of these swaps are happening within these pools. So all of that activity is happening. And so when you see, stats on all the volume that's happening on Meteora, that's all the volume, all the swaps that are happening in all those Meteora pools. And typically all of those swaps, the majority of those swaps are happening either through bots or through Jupiter. So when you use the Jupiter interface, Jupiter figures out, all right, to get you the best price of USDC to Sol, Jupiter figures out how it's going to route that swap, right? So it may go and it may find the best price in a USDC Sol pool, or it might find the best price in a USDC Bonk pool, and then from Bonk to Sol, right? So Jupiter's doing all of that magic, and it does it very, very rapidly. And so Jupiter's doing a lot of the work of moving a lot of this liquidity around all of these markets. It's really just amazing how it all works.
That routing engine is crazy.
It is. It's
How fast it is, I mean.
Yeah, it's amazing. It's amazing.
Right. Yeah, that's why we're here, right? This is really heady stuff. Okay. But in the meantime, we can have some fun. We'll leave the heady stuff to the geniuses at Jupiter. Let's get into the UI based stuff, which is why we're all here. So quick, some more definitions. The DLMM is the dynamic liquidity market maker. And this is a evolution of those other market makers we described earlier. And it basically allows you to shape your liquidity the way that you want inside of what are called zero slippage bins. So each one of these is a little pool of capital. What this does is it allows you to precisely target where you want your assets to be deployed along the price curve. Two interesting things to comment on here are the top is your position, either as it exists or what you want to put in. And the bottom is the existing liquidity within the Meteora platform. So like Kika said, there's lots of different platforms that are putting their money to work in these markets. And this is this is the distribution within the Meteora for this pool. Does it cut across all pools? It's just this pool. Yeah, it's just this
pool.
It's
just that pool.
It would be cool. I think there's some tools on Dune to see aggregate liquidity across all pools for assets in Solana, but
Kagran put together a really nice dashboard for that.
Yeah, I'm not sure how frequently the samples are taken though, so room for improvement if anyone's a developer. So I mentioned bins before, zero slippage bins. Bins are essentially dividing up all the liquidity in the distribution that you selected into little chunks called bins. And the P just refers to position. And they're numbered here just to make it easier to read. But in this situation, the active bin is like where the price currently sits. And then as price moves to the left or to the right, you'll get more of either token X or token Y as it moves. I'm sorry, less of token X or token Y. So if the price moves up here, market participants are using your capital to buy your token X for token Y, and you end up with more token Y. So in this example to the right, our pool is WBTC CBBTC, or the other way around. And so as the price of,
Say that 5 times fast.
yeah, seriously, as the price, oh gosh, I'm gonna mess this up, aren't I? As the price of CBBTC goes up relative to WBTC, you'll get less CBBTC and more WBTC. I think I did that right.
You did. That's awesome.
And because this is what we call stable pair, which means relative to each other, the price doesn't move very much, the bins are quite small. So you can see here, it's a 10,000th in value. Of course, each one of these bins represents a massive amount of capital probably, but anyway, it doesn't have to. And actually, I'm not going to say that. I'm going to wait till the visual aid comes up here. Bin steps. So each of these bin steps, each of these bins is the container, and each of the steps is the percent change that needs to occur to move from one bin to the next. So in this case, with a 50 bin step, it's 0.5 percentage points or 50 basis points is a move from one bin to the next. You can see the math here. So if we say start at the current price of 0.01231 here, which is where the image shows our current price, the next bin over is 50 bips or 0.5% higher in price. So the price would need to move that much. And here's the math behind that. So 1.005 is a 0.5% move. Multiply that out, and you get 0.01237. And here, oh, sorry, that this doesn't match. So 0.1231 to 1237. Oopsie. So we started here, 0.01231, as the numbers got calculated a little later on in the slide. And then we moved over one bin to 1237. Cool. Maybe we should adjust the numbers to match the bins. Heavy metal. Sorry, I didn't catch that before the demo or before the presentation.
Yeah, maybe we should.
Yeah. It's a
Maybe-
royal we. You and me.
Yeah. I got it.
Yeah. Cool. So at any rate, for the viewers at home, the math works. So those are bins. Getting into the details. So this is the super awesome part about DLMM is the fees that get generated by price movements throughout these zero slippage bins. So to round out the picture, higher bin steps mean price has to move more for it to move from one bin to the next. Low bin steps, price has to move less to move from one price to the next. It's a really nice visual there. Goose Gang, of course. These guys are brill.
Yeah, that's Chief.
Chief. Yeah, really nice visual, Chief. So that's cool. Why do I care? Well, you care because if the bin steps are lower, there's more jumps between bins or fee events. So you generate fees when these prices move between the bins. And if you have higher bin steps, you jump between fewer bins. So there's like a base fee within a pool, and then there's a dynamic fee. And the dynamic fee refers to these jumps between bins.
Actually, the dynamic fee. So what happens is the pool has a base fee.
Which slide are you on, Geek Lad? You want this one or the?
Yeah, that's fine. What happens is the pool has a base fee, and what happens with a dynamic fee is when there's a lot of volatility within the pool, so it's moving across a lot of bins very, very rapidly, like, and it could be in one direction, it could be oscillating, whatever the case is. But when there's a lot of volatility within the pool, then that's when dynamic fees kick in, and that's kind of like it's like a bonus on top of the base fee. So if you're like in a 5% pool, you'll often see it kick in. Like if it's a brand new pool for a brand new token and it's a 5% pool, because there's a lot of volatility, you'll often see that dynamic fee kick in, and you'll see the fees jump up to 10%. And that's because it's the asset's very, very volatile. It's moving across a lot of bins. And then once that volatility starts to slow down, then that dynamic fee will kind of come back down. And then eventually the dynamic fee may go to 0, and then you're back to just the base fee, that 5% fee.
Awesome. Great.
The other thing I'll say about this is like and I really love this visual too, right? Because it's kind of easy to see when you're comparing a high step bin to a high step pool to a low step pool. The other thing is that, like, you can see where we've got the purple and the high step bin pool. The smaller bin step pool can actually accommodate trades at smaller increments, right? And it can oscillate back and forth. So what will happen is the price may move in that lower bin step pool back and forth. Like, it can oscillate back and forth between those prices. But in the high bin step pool, the price won't change at all, and you'll see 0 volume in the high bin step pool. So typically your lower bin step pools, they have lower fees, but they have higher volume. So, depending on the asset, you may actually earn more in a lower fee pool because it's going to get higher volume, because it can accommodate sort of those oscillations within what would be a single bin in the higher bin step pool.
Yeah, it's a delicate balance. You'll be able to get into this in more detail tomorrow, Geeklad, but the base fee and bin steps are quite simple, but can lead to really complicated price dynamics and fee generation.
Yep, no doubt.
All right. So we'll get into this again in more detail tomorrow, but variety of strategies you can use in DLMM. I'm going to start ripping through these so we can get to the demo. This is a spot trade, and you can spot position. Sorry, what do we call them? Strategy. And your capital is uniformly distributed throughout the price range you've selected. Another way to go is the curve. These are spelled out in the interface when we do the demo, you'll see. And that basically means you're going to concentrate your liquidity in bins, but in the shape of a curve where there's more of it in the center. And then, of course, the opposite of that, which is bid ask. This one gets used quite a bit when you have a volatile pair and you want to pick up more of it as price goes against you, and then hopefully sell as the price moves out of your range, up and out of your range, having collected more of that asset. And you can, in addition, stack strategies where you combine, say, a base level of liquidity in a uniform distribution or spot, and then stack on top of that an additional position to concentrate your capital a little bit more. That way, when you are moving moving towards the low end, you still have a baseline amount that you're participating in as prices trade in that direction. And then you can end up with some pretty interesting shapes where here, you're expecting there might be the thinking behind this one might be, I'm bullish on this, and I just want to grab as much as I can here if price goes down. And then I might then later move some of this over to the right side or not, but just pick up as much as you can. And then as price moves up higher, I'm going to capitalize on what I've picked up. So this is another one of the interesting. And there's a channel on the Discord called Show Your Curves where we share interesting shapes that people have come up with. Again, just to summarize, your goals within DLMM is you are trying to move your capital to where you see the most opportunity. And the most opportunity, it means that you have your capital around an area of experiencing a lot of trading volume. That way you're facilitating a lot of swaps within that range. And there's two ways to profit within this. Obviously, we've talked about the positive divergence loss. It's sort of an oxymoron, I know, but you'll get used to it. I promise. And then getting in a pool with high enough fees, either base or dynamic fees, that you get a positive return to make up for any divergence loss. And then some things to mention for day two. I'm just going to leave this up on the screen for a minute, but we need to move on. Regarding positive return from fees, I think we've talked about this in detail, so I'm just going to flash the slide up. Again, the most important things to consider for this are volume, liquidity, and volatility. Another note about the interface, it will show you your distribution within the total distribution in this pool. So you can see here the sliders, which you can grab and move, are where your liquidity will be or is already. And up at the top, it shows your shape, the shape of your position. And I'm going to skip over this one. We'll just get into divergence loss again. Again, make sure as you start getting more advanced that you shape your capital in your DLMM position in a way that reflects your opinion of what the market is doing. Okay, so let's get into the tour. So as I mentioned before, when you open Meteora these days, it goes straight to the DLMM, I believe. And we can see here, because it's permissionless, when you go into one of these, it'll show you the top ones by whatever you've selected. I'm going to flip. I had previously set this to 24-hour volume. I'm going to switch this back to TVL so it resorts. And then I'm going to find this handy dandy search feature. Is going to allow us to look for a stable pair. And within that, sorted by TVL here. And because this is stable, you're going to end up with very small bin steps and low fees because there's very little risk here. So capital goes to spreads itself out between the low risk positions and the places where they can take more risk and increase their returns. Getting into my wallet here. pop it up on the screen. So here's my one soul of capital, as we talked about, are as required for running the boot camp and participating in boot camp and getting your roles. We are going to believe, let's see, what was our agenda? We are going to just go ahead and dive in. Given the time, I am going to skip the tour and just go ahead and dive into LPing in the USDC USDT pool. So let's just dive in here because we did a tour earlier and it's similar. Again, your entry panel is over here on the right. Your pool details panel is over here on the left. A little bit different from the tour we did earlier. We've got our bin steps now instead of the other data. We've got our base fee and we've got our dynamic fees that Geeklad just described and we showed in the slides. In order to get into this pool, we obviously need some USDC and some USDT. I am going to do that by selling some SOL in our little handy widget. So let's just...
And Otto, before you do that swap, maybe pull up the settings, right? So one thing, especially if you only have one SOL, you want to be sort of wary of what your max cap is for your transaction costs and stuff like that.
Yeah, so that's right. There may be some beginners, some total beginners. This stuff gets important when the blockchain gets congested, when there's a lot of activity, and can impact whether you get filled or not. I tend to leave mine at dynamic. Max slippage of 3% is significant. We could change that to 1%, but let's take a look at where we end up because like we said, we've set it to dynamic. So we'll probably do much better than that with a stable coin pair, and or high volume pair like SOL USDC. So let's see. Let's just go with 0.1. I'm gonna refresh this. It's been sitting there for a little while. As you can see, there's a max fee there. So we had less than 10 basis points of price impact. Typical minuscule Solana transaction fee. And we've got our USDC. And then we're also going to USDT. Again, super cool Meteora routing. I'm sorry, Jupiter routing. This is going to bring in a DEX called OneDEX, which I've never even heard of. Popping up all over the place all the time. And then this is actually going against Meteora pools. And then it just swapped out again because this is constantly updating. And now it's using Phoenix and Stable weighted swap pool. Very cool. Let's see what happens here. Going to do multiple hops. It says, wow, nice and zippy this morning or evening. Okay, so here's our USDC and USDT. It seems pretty legible. I don't think I can zoom it in anymore without it looking really sloppy. Yeah, we'll just leave it at the current level. Okay, so here we go. We're going to add a position, add liquidity, or you can flip over to the add position. Takes you to the same place. And we'll just add the max. You can toggle autofill if you want. We'll do that. And that will, when I do $10, it'll automatically fill this in over on the left as well. And because this is a stable pool, we can now see here the shape of the liquidity in the pool. One more detail to highlight is you can see actually the details of each bin. This is a nice feature they added in the last 6 months, which gives you a more detailed summary of the existing liquidity. And then, of course, how much of each you have. Because this is a stable coin pair, we're going to go concentrated, and we're going to tighten this up. So we're going to go plus or minus 4 basis points on either side. You need to pop out of the box in order for it to update, just so you know.
Of course,
let's
you
see
can
if I
always
can-
grab the sliders and move them yourself.
Yeah, see that as well. Interesting to that. Okay, here we go. A little more balanced. Call that good. And then, oops, I don't have enough US to see. Oh, sorry, I clicked the wrong side. Let's flip that around. And then heavy metal cook would kill me if I didn't talk about this, but I'll just go over it quickly. So when you enter a position, you need to pay rent, which is basically Solana blockchain's way of having people pay to use it. Without this, the economics fall apart because everyone would just be incentivized to spam the chain with all kinds of random transactions. But this is refundable because the bins already exist within our pool. If you stretch out beyond the pool to areas where price has not hit yet, you'll need to create new bins. In order to create those bins, we need to actually pay the blockchain in a way that is non-refundable. So if you are in a new pool, or sorry, a new asset that and going into areas with, say, wide bin arrays, large bin sizes, bin steps, and go wide outside of existing price range, you might end up paying a non-refundable amount to build those bins. So just be aware of that. And then, of course, the total amount for this transaction seen here. All right, we are back in our range, so I'm going to go ahead and add this liquidity.
Just FYI, Otto, we got 15 minutes
Thank you.
and a few slides left. So, yeah.
Definitely want to save some time for those last ones. We're executing. Okay. Sorry, I blathered on, people. It's been a while. I'm a little rusty in my delivery. Seemed like good stuff. I found myself quite interesting. Heavy metal. Did you agree?
You're fascinating.
Yeah. I know.
No, man, you did awesome, man, as always.
Thanks. Yeah. Just what I thought I was going to do. We're going to do. Yeah. Okay. So we came in. Cool. So that's that. And for folks that thought this was a little slide heavy, I agree with you, but there's just a lot to know here. And hopefully you're here because you've realized that and need a coaching in the fundamentals. Geeklad's going to go. Day 2 historically has been all about demo, practice, participate, and then you'll get more of that if you fulfill the bootcamp requirements for the role. Cool. Okay, so next on our agenda is to LP into notifications. Okay, so just really quickly, once you build these positions, you can set up notifications up here in the top right with this little bell. and you can set them up to notify you and put your email in here to notify you when you are moving out of positions and into positions. And you can even set up a Telegram notification. So that's really helpful if you have, say, an overnight position or something you want to really keep a closer eye on. That's a really important feature. And now we're going to go into the volatile DLMM pools. For example, we would not pick USD CUSDT nor Sol MSol because those are tightly correlated. But we could do something like Sol USDC. So let's pick one. Let's see, we have a tiny bit of USDT. We'll just do another swap. It's fine. You guys want to plug something? Let's see. Let's just do Bonk, huh?
Yeah, Bonk's good. Bonk's good.
All right. I like Bonk because it's volatile enough to have fees and larger bin steps and liquidity, but popular enough and widespread enough to have a decent amount of value locked. As you can see, the 24-hour volume is quite low compared to the amount of value locked, but it's good for demonstration purposes. So here we are in a Bonk USDC. Sometimes you'll see these pairs inverted, where the quote token is on the left. Be really cautious for those. It's quite annoying because it's a permission system. We can't prevent it, but there's now some user interface things to try and encourage people to do a normal ratio. This one's set up correctly. Bonk on the left, USDC on the right. You're gonna need a little bonk to set up this position. So I've already got Sol. Let's do Bonk Sol. That way we can do fewer trades. Here we go. Go with a smaller bin step. This is where most of the trading happens against Sol as opposed to USDC. So the fees are a little smaller, bin steps tighter. So we'll get some bonk here. And this time I'm just going to go out to Jupiter. Trade some Sol for bonk just so folks can see that. Zoom this in so you don't have to squint and zoom your screen. And we will trade. Need to connect my wallet. And we'll do 0.1 of that. Let's go big. We go 0.2. On the crazy. We're going to do $1 million. Folks don't know you can also set this lower part to get an exact amount, exact out. I think it's a feature. Yeah. But it might increase your fees a little bit. But we'll do that. I'll trade $1 million bonk. Get the denominator bias going. Okay. So that should show up. Yeah. I can refresh. So we've got our $1 million bonk. We've got some Sol. Going to go over here and create a position. We're going to do all that. We're going to set autofill. And again, to demo that, you can do this and have an unbalanced pool if you want. This. So you can have, way more bonk than Sol. And you would do something like this if you weren't interested in buying a lot more bonk, but you did want to participate in the price action down there. And then you want to participate in this price action up here more. I am going to go with a balanced pool. And as you can see, it updated for me. And I want to buy more bonk as price goes down and sell more as it goes up. And then we will, yeah, that looks about right. Let's tighten this up a little bit. It's highly likely that price moves quickly out of this range, but bonk and SOL tend to be pretty highly correlated, so we'll see what happens. Here it goes in. The infrastructure work Meteora did seems to be paying dividends. It's been quite snappy today. Starting a transaction does tend to generally be slower though, because as you can imagine, it's creating transactions to distribute all these bins out into the on-chain so that people can hit it with their trades. If you run into difficulties in this area, you can adjust the settings here. Either adjust the liquidity or the swaps, slippage amounts, and in high volatility pairs, sometimes you need to do that. In addition, there's another. Oh, we can see here that it failed. In addition, there's another place where you can change your RPCs, but that's less frequent that you would need to do that. Do you think we should change the settings for fun?
Otto, we have 8 minutes.
Yeah.
We need to move. I'm sorry.
Let's do.
It's not the slippage setting, Otto. It's the
Okay.
fees. So if you go up to the top where it says
Yeah.
fast, priority fast.
Yeah, that one. Yeah,
That's the one.
we'll get to about. Cool. So there we go. There's our position. And here we are. And we're facilitating swaps. Cool. So that's the volatile pool. Geeklad's going to go over this in a little more detail. To get the information you'll need for the fulfillment of the bootcamp, you'll need to keep track of what's going on with your wallet. And the best way to do that is with a blockchain explorer. We like to use SolScan regularly. There are others. You'll need to put your wallet ID here into that, and you can get your wallet ID in Backpack by doing this, clicking that little copy button. Other chains have other wallets have different ways of doing it. Then you need to go to your DeFi activities. You'll see your transaction down here, and then you can copy the transaction ID. And that's a motion that you'll need to do when you are submitting your form. So we're going to talk about it in a second. To participate in day one, here's your QR code. The rules for participating are that it's going to be open for a week after the end of day 2. And even if you don't fulfill the day 2 and LP Army requirements, you will still get the bootcamp trainee role in Discord, but you won't get a NFT POAP. And I'll leave that up there for another minute. This is a link to the forum, right? Heavy Metal?
Yes, that is a link to the form, and I'm going to say this out loud. I've got this on here. I will not be issuing roles until after the forms close. It says right here on the screen, December 22nd at 6 p.m. UTC. So please don't ask, where's my role today? You're not getting it today. Calm down. Pay attention. You'll get it next week. So yes, and the
week after next. Yeah, the week after next.
Well, yeah, so like on the 22nd is when those forms close, and even though I will be camping, I will be taking my computer with me to make sure that everybody gets their bootcamp training role as fast as possible. Tomorrow's forms take longer because there's grading and all that, but I'm going to get it done even on my Christmas break for you guys. But please be patient. Thank you.
I'm just going to breeze over this. The stimulus proposal is something that's been running since about 11 months ago. And tune in tomorrow. There's going to be updates in the Meteora Twitter and Discord about the future of this proposal, of this plan. Here's the LP Army universe, our community. Thank you everybody for attending today. You fill out the form and you don't do anything else, you'll be a bootcamp attendee, a bootcamp trainee. And I hope you got something out of the course. Thank you for coming and for making it more interesting with the questions and everything. The next role is LP Army Private. We'll get into more detail on how to qualify for that tomorrow, but that is a subset of the LP Army within trainees, and you're getting closer and closer to the core team as you move through as you progress through these different levels. After that is LP Army. These are people who have contributed something significant to the community, like tools or participating in answering questions in the Discord and all sorts of things that you can imagine. Then there's instructors like Heavy Metal, me and Bootcamp and Gosha and Geeklad and Magica. Oh, and Photon Magic joined. Hey, Photon. You have to have a certain level of awareness and knowledge to do that role. And then the mods are the ones that have different color in the Discord and are generally more active and participating and relaying feedback to the team and distributing information from the team. And then the team itself, which I had the pleasure of meeting in Singapore this fall, just couldn't ask for a more genuine, higher integrity group of people. Led by Ben Chow, our fearless leader at Meteora, who is has roots in all sorts of all different types of technology, aspects of technology, is a designer, can code, and obviously has great insights into what DeFi needs and what crypto needs. Definitely follow him on Twitter if you haven't already. Quick shout out to the LP Jam sessions. Currently, these happen Monday mornings and led by Ordinary Bob. This used to be called LP Ben's Money, but have moved on to the Jam sessions, and I think there might even be some more coming at you in the near future. Quick post of the different Discord channels. I'm not going to go into these into detail on these because of time. Any you want to particularly call out? Heavy Metal? I love LP Army sharing and just chilling, but there's a lot of good information that comes through these.
Yeah, I think some of the most important ones, I mean, general chat, show off your curves. You know, if you want to talk strategy and stuff, that's the place to go. If you've got some of these specific questions about where to LP, how to do it, you know, what to do with a particular coin, get ideas for other stuff, that's the place to find it. The LP Army sharing, you know, that's just for like content and guides and stuff, X posts, so keep an eye out there. You know, you can read this, but you know, there's a lot of great stuff, and we just added a new meme channel or meme 33 channel just for that app. So that's it. Yeah.
Awesome. Yep, and a little more detail on the Discord channels there. We did Q&A throughout it. Hope you got your questions answered. Please see us offline if not. And here we are on the minute, 10 a.m. West Coast. What are we, UTC time?
6 p.m. UTC.
6 p.m. UTC. Thank you all so much for coming. Bootcamp resources link, as we mentioned, here it is again. Really hope to see you tomorrow. Geek Lad, any closing comments?
No, man. Awesome job. Love it.
All right.
We'll see
Let's
you guys
close this
tomorrow.
out, heavy metal. Yeah.
Yeah. Music on the outro. Y'all, thank you again, Otto and everybody. And now we go with a new jam for you guys.
Damn. Bye, everybody.
See ya.
Bootcamp grind, goals arise, creating wealth, no surprise. Goose Gang here, teach the way, victory's ours every day. Stampede of might, every army strong, warriors unite where they belong. Fight together, win the prize, earn the fees, time to rise. Stampede of might, every army strong. Warriors unite where they belong. Fight together, win the prize, earn the fees, time to rise. Step by step, rules before, power surges, a mighty storm. Together strong, every army might, these we conquer in the fight. Goose Gang leads, wisdom shared, battle tactics always prepared. Forge the path, victory we claim, ride the waves, no one's name. Tactical mind, fierce and proud. Echoes of these walls shouting loud. Together we march, unbreakable chain, honor one, feast again. With every swing, with every stride, earn it all, feel the pride, Meteora's call. Hear the sound, triumph's ours, stand our ground. Down.